We have to dive straight into a scenario that is, well, it's pretty much every investor's worst nightmare. We're talking about Corcept Therapeutics. Ticker is CORT. And in just one single day of trading, the stock was just annihilated, a staggering 50% crash. I mean, that wipes out years of gains. It erases half the company's value, just poof, overnight. It was pure market panic. So, okay, let's get into this. Wall Street is running for the hills. Analysts are downgrading it left and right. The sentiment is toxic. Our mission today is to really cut through all that noise. We need to figure out, is CORT now a falling knife you just can't touch? Or, and this is the big question, is this a massive once-in-a-decade sale?
That is the essential question, because when you see a move that sharp, that fast, the first reaction is almost always pure emotion. The price just overshoots. We have to, for a minute, just ignore the stock chart and look at the actual business. We're looking for, I think, 3 key things that the market seems to have just completely forgotten in the chaos.
Okay, what are they?
The company's cash position, which is, a fortress, the safety of their core business, and, this is the big one, a huge near-term catalyst that's being completely overlooked.
All right, let's start at the trigger point, the moment the bomb went off.
Oh.
Our analysis pins it to a specific event on December 31st, 2025. What happened?
So the immediate cause was a complete response letter, a CRL.
From the FDA.
From the FDA. In plain English, that's a rejection of a new drug application. But, the details of why they rejected it are everything here.
And this CRL was for their new drug, relacorilant, right? For its first planned use.
Exactly. It was for treating hypertension, so high blood pressure, but specifically the kind caused by hypercortisolism, a symptom of Cushing's syndrome. Investors were banking on this being a smooth approval.
Right. And I want to get really specific here because this is important. The analysis is clear that the FDA did not say the drug was unsafe.
No, not at all.
They asked for additional data on efficacy. Now, is that just a speed bump? Or is asking for more efficacy data the FDA's way of saying, this thing just doesn't work well enough?
And that is the sharp distinction. It's why the market reacted so violently. When the FDA asks for more efficacy data, it just means they aren't convinced yet.
Not convinced the benefit is big enough.
Right. For that specific use case. It moves the goalposts, it adds a ton of time and a ton of money to the process.
But the market took that as a complete failure. Like the whole drug, the whole pipeline is dead in the water.
That's the market psychology. I mean, they had priced in absolute perfection, a seamless transition to this next-gen drug.
And when that didn't happen?
They dumped it. Sell first, ask questions later. They're treating a question about one use case as a death sentence for the entire molecule. And as we're about to see, that's just a huge mistake in this case.
Okay, so let's move on from the panic and look at the reality. This is where that contrarian buy-the-dip idea really starts. Let's talk about the company's financial fortress, the safety net, because this isn't some small biotech living on fumes.
Not at all.
They are financially stacked. As of Q3 2025, Corcept had something like $524 million in cash.
And critically, 0 significant debt.
$500 million in the bank. That's a powerful safety net.
It's the first pillar. You look at the valuation after the crash, around $3.7 billion, and you realize almost 15% of that value is just sitting there in safe, liquid cash.
That's real downside protection.
It is. Most biotechs get a rejection like this, and they immediately have a funding crisis. Corcept can weather this, they can run the new studies, they can pivot, they have options.
And then there's the second pillar, which is their existing cash cow, Korlym.
Right.
This drug is already on the market, it's approved, it's selling, and it's making a ton of money. The analysis shows it's bringing in over $200 million a quarter.
And that's the crucial part. The rejection was only for the new drug. Korlym is completely untouched. The company is still hugely profitable, still cash flow positive, just from that one drug alone.
So that profitability creates a floor, a hard floor.
That's the floor we keep talking about. It limits how much further the stock can really fall because there's a real profitable business underneath all the noise.
Okay, but let me play devil's advocate here because this is what I think our listeners are thinking. We've got a floor. A $3.7 billion company with $500 million in cash and a profitable business. Great. But if the whole growth story was tied to relacorilant, and that's now delayed by, 2 years? Maybe more? Why should anyone care that the floor is at $30 instead of $10? Where's the upside?
And that is where the market's oversight is just... It's astonishing. While everyone was fixated on the Cushing's hypertension failure, they missed the single most important thing.
The hidden catalyst.
The hidden catalyst. They've thrown the baby out with the bathwater because they're ignoring a completely different and potentially much bigger use for the exact same drug.
Okay, lay it out for us.
Relacorilant isn't just for Cushing's. It is deep in the trial process for a huge area in oncology. Platinum-resistant ovarian cancer, PROC.
Wow. Okay, that's a very difficult to treat cancer, a huge unmet need. So what's the status there? The CRL didn't affect that trial.
Not one bit. The oncology pathway is totally separate. And what's so fascinating is that the FDA has already accepted the new drug application for the ovarian cancer indication.
So the FDA has already said the data package is complete and ready for a final review.
Exactly. And we're not talking about some vague future date. We have a hard deadline, a decision date.
When is it?
The PDUFA date for the platinum-resistant ovarian cancer indication is set. It is July 11th, 2026.
So just a few months away. And that's the logical leap the market just completely missed. Failing to show enough efficacy for blood pressure doesn't mean it fails for cancer.
It has nothing to do with it. The biology is different. The endpoints are different. In the cancer trial, they're measuring things like overall survival. It's a completely separate question from the data the FDA wanted for Cushing's.
So if that July decision is an approval, what's the upside? I mean, given how badly the stock has been beaten down.
If the ovarian cancer indication gets approved, well, you're talking about a market opportunity that could easily justify the stock price before the crash. Maybe even more. The analysis suggests the stock could double or even triple from where it is now in the low 30s, which is why the current price, around $34.80, seems so disconnected from that upcoming catalyst.
Okay, let's pivot to the here and now, the trading reality. Before the crash, CORT was around $70 a share. Today, it's hovering around $34.80. That crash has just warped the valuation metrics. The PE ratio, the price to earnings, just based on the profitable Korlym business, has been smashed down to about 20.
Which is historically cheap for a profitable, debt-free biotech that has a massive growth catalyst literally months away.
It's signaling that the market is giving zero value to the future.
Zero value to the cash, zero value to the entire oncology program. They're pricing it like it's a business in decline, which, as we've seen, the fundamentals just don't support.
And from a technical side, the selling was so fast, so brutal, that the RSI, the Relative Strength Index, is deep in oversold territory, probably under 20.
And that's usually a sign of exhaustion. It suggests that even separate from the fundamentals, you're probably due for a technical bounce, just as short sellers have to buy back their shares.
So that brings us to the big question for you listening. How do you approach a situation like this? The downside seems capped, but the upside depends on a binary event.
Based on the analysis, you can really look at it through two strategic lenses. And again, we're analyzing, not recommending.
Right.
But the first one would be for someone who's, a bit more aggressive.
Someone who wants to catch that technical bounce we just mentioned.
Exactly. That's the aggressive strategy. You might start a position right now to try and capture that short-term snapback from these oversold levels. You're trying to play the quick pop from the current $34 range.
Okay, and what about for people who are, a little more wary of trying to catch a falling knife?
That's the conservative strategy. It's all about patience. You wait for this initial panic to really burn out. You aim to build a position maybe a little lower, say in that $30 to $32 range. You're not trying to time the bottom perfectly. You're building a long-term position purely for that huge catalyst coming on July 11, 2026.
So to wrap up our deep dive here, Wall Street saw a bad headline, reacted with pure emotion, and just panic sold. They threw out a stable, profitable core business and a massive oncology opportunity right along with the bad news.
The final takeaway is that the risk-reward here just seems profoundly asymmetric. The downside feels limited, it feels capped by that cash and the Korlym profits. But the upside, the potential approval in ovarian cancer in July 2026, is massive. The market is basically pricing that at a 0% chance of success. If that's wrong, the payoff could be immense.
Which brings us to our final thought, the thing we want to leave you with. Does the market really believe that a profitable company with $500 million in the bank and a clear binary growth catalyst just months away is truly worth half of what it was yesterday? Or is this crash simply a function of herd panic and short-term thinking that can't see past the next quarter? And remember, your analysis has to be anchored to that July 2026 timeline for this whole thesis to even have a chance to play out.